Hello, my name's Craig Erlam, Senior Market Analyst at OANDA. Today we're going to talk about the euro versus the pound. Now, we've been on a steady incline really now for the last couple of months here. We haven't seen many corrections along the way, despite the fact that we've seen plenty of volatility in the pound itself. It seems that we've been very much one trajectory when it comes to the euro. But as we're starting to approach now key levels which, as you can see on the chart, historically we have been rotation points, we are starting to run out of a bit of steam. So this could be an interesting period now for this particular currency pair. As we've approached 90, a big round number, key psychological level, we are starting to run out of steam. These indicators on the bottom, those momentum indicators, the MACD and the stochastic, are not confirming the recent highs which are being made in price. Moreover, if we look at price itself, it seems that every time we hit a new high, we quickly do rotate lower, and we are seeing those little dips. Again, another clear signal really that the momentum is starting to fall out of this move, that maybe we're starting to see doubts arise as we approach these historic resistance levels, and that we are potentially primed for a bit of a corrective move. It is important to note here that these momentum indicators on the bottom, they do not necessarily signal reversals, they just signal that a trend is exhausting. We can continue, and we often will continue, to see new highs being made in price during these periods, but these do sometimes act as a precursor to these rotations happening. So now that we're entering into this 90 to 91 region, again, looking back on the chart, you can see that this has historically been a bearish point, a rotation point. We could potentially see further divergences forming here. Now, from a more fundamental perspective, a lot of this does actually make sense. We've seen a lot of negative news in the UK, of course. We've seen the leadership race for the Conservative Party. The front runner very much supported Brexit during the referendum, so very much going against what we saw from Theresa May prior to her leadership bid. He's also suggested that we are leaving on the 31st of October with or without a deal, so heightening the possibility that we could get a no-deal Brexit, something that had been largely written off before. Of course, parliamentary procedure will make that extremely difficult, but the fact that he favours this as a potential scenario does heighten the risk, and that's very much weighed on the pound over the past couple of months. But what we have to ask ourselves now is how much is left to be priced in. He's so far ahead in this leadership race with Jeremy Hunt that it seems highly likely that he will become Prime Minister in a few weeks' time. And I think that's potentially now being reflected in the fact that we are starting to see this move run out of a bit of steam. Now, in terms of what we can expect to see going forward, like I say, we are a couple of weeks leading into this leadership race now. It's been quite quiet on the euro front, and that's very much benefited the currency. We are expecting some easing later this year, but maybe not in the near term. So I think it's going to be very much a pound-driven move. I think the quietness is benefiting the euro, and I expect that to continue. A lot of the focus still on the US and the UK, but as I say, because so much is already priced into the pound, the question is how much more negativity is there to be priced in, and is this therefore prime for a correction?